Hello traders. What I want to share in this video is a whole set of divergences that are building up in the indices, and it's with the indicators as well as the price action of the indices itself. So let's take a look. Now this is the SPX, S&P 500, and we have a very similar divergence like we did just before the COVID crash. You can see the RSI here. It got pretty overbought after a long bull market. It got pretty overbought. We got that divergence here where the price moved to a higher high and the RSI did not confirm. There was a divergence and then that led to the COVID crash. Now I think we're seeing something very similar where we have a slight break to new all-time highs, just like last time, a slight break to new all-time highs followed by a big divergence. And this is coming on the back of a big bull market, got very overbought. So that's a momentum divergence right there. Something very similar can be seen with the MACD as well. Again, it's quite similar because they're both momentum indicators, but nevertheless, right? You can call it a confirmation signal because last time you did not get it. Last time you did not get a divergence in the MACD. You can see up there. It was just the RSI. So this time I guess it's an even stronger signal because you're getting confirmation with both of them. So you can take a look here. MACD, lower high. And I mean, it's pretty obvious here, but I'll show it anyways. Lower high here with a slight break to new all-time highs. So that's a divergence. And also with the breadth, so that was momentum. We looked at momentum as a form of analysis. Now we look at breadth, which is the symbol is S5TH, which is the S&P 500 stocks above the 200-day moving average. And again, there is a divergence, just like the COVID crash. You can see in that slight break to new all-time highs. This is so the blue here. Actually, they're both kind of blue. We can just call this greenish, and the blue here is the breadth. You can see the divergence when the S&P made a slight higher high. Well, just broke to new highs. That was a false breakout, but you knew that was a false breakout because of the divergence in the breadth. Well, take a look at this. Same thing. We have a slight break to new all-time highs, which I think is a false breakout because it's not being confirmed by breadth and momentum. So yeah, so the point I'm trying to make here is the internals are telling you not to take this new break to all-time highs very seriously or take it with a grain of salt because it's not looking good on the when you look at the internals. So that's that. And I am bearish from a positional standpoint. So I'm not saying that the market would crash tomorrow morning. What I am saying is a positional top is forming, and I am currently bearish through that means. And also, even if we do get a fall, I don't think we would get as big of a drop in the same time frame. So, for example, this was a 4-week drop. We had about a 30% crash. I don't think we would get something like that, but yes, a significant 10% correction from here is seeming quite likely over the next 3 weeks or so. All right, thank you.